What should we be excited about this week? Well, we get updates on brand new houses being sold, new construction, how much those houses are worth, appreciation, and we'll also hear about jobs and how much people are spending. It's like getting the next piece of the puzzle, helping us see the bigger picture. Each week, I put out a newsletter breaking down the economics affecting real estate and a look ahead for the upcoming week. I've decided to put it into video format for ease of use and understanding. Sometimes reading economic language can get a little, frankly, boring, right? However, it's incredibly important we understand what's happening and how all the economics work, because they tend to give us signs of what's to come and what to be prepared for. I'd love to see you on that list, so if you'd like to join the newsletter, please do me a favor, reach out to me directly, comment below, and I'm happy to add you to the list. I've got your guide to all things mortgages and real estate. This week, I've got some really interesting updates for you. So let's go ahead and get started. Let's break it down in a fun and hopefully easy way to understand. All right, first of all, let's talk about the housing market. It's like we're playing a game where you buy and sell houses. You may remember it. It was called Monopoly, but this is real life. In October, not as many people bought homes that were already built. So existing homes compared to September was much lower. It's actually the lowest level in 13 years. Why, you ask? Well, when you buy a house, they often borrow money. It's called a mortgage. And right now, it costs more to borrow that money. And also, there just frankly aren't as many houses to choose from. Now, there's something called a lock-in effect. More than 70% of all mortgages are below 5%, meaning most people believe if they stay in their home, it's going to make more sense financially than to buy a more expensive house at a higher interest rate. Probably makes a lot of sense to most. Additionally, it's not very attractive to buy a house with an interest rate in the 7s or possibly 8% when you're sitting at an interest rate below 5%. So that is definitely providing a little bit of what we call demand destruction. So demand destruction is taking place. Not as many people are wanting to buy houses, and it's no doubt about it affecting the way people are making decisions on buying houses. But here's a cool fact. The houses that are for sale are being bought really quickly. Really less than a month. And there's no doubt we're seeing a little bit of an extension right now on that. I'm certain that there's some folks out there that are telling me that their house has been on the market for 60 days or so. But the fact is, overall, we are seeing houses sell fairly quickly. And the folks that actually study the markets believe that we are going to see a pretty significant increase in the amount of existing homes come spring. So time will tell. All right, let's shift gears a little bit and talk about jobs. Imagine if people suddenly don't have a job. They have to ask for help. This help is called filing a jobless claim. Recently, fewer people had to ask for this help, and that's a great thing, but it's still hard to find a job for people that are without a job. There's no doubt about that. And we're never rooting for anybody to be without a job, but here's a fact. The more people that file jobless claims, we tend to see money run into what are called bonds, and bonds affect our interest rates. And typically, if we see higher jobless claims, that means lower interest rates, and usually more people are buying houses when interest rates are lower. So this is all about how the economics affect real estate, and that is how jobless claims can affect real estate. When we see jobless claims spike, sometimes that tells us a little bit about the future, like a recession. So let's take a mini lesson on the economy. There's this thing called a recession. It's like when the economy takes a little bit of a vacation or takes a snooze, however you want to describe it. It's not working on all full cylinders aren't kicking. During this time, people might not spend as much. Prices of things may go up. And there's a group of folks that actually use a tool to guess if a recession is coming. And right now they're saying we might have a short one, but we may have one is what it's looking like. But here's the silver lining. During recessions, the cost of borrowing money often goes down. And that could be great news for a lot of people that are trying to get into the housing market, but also folks that have bought in the last couple of years. It might be a great opportunity for them to refinance and increase their monthly cash flow. So that way they're not paying as much on their monthly mortgage payment. All right, finally, what should we be excited about this week? Well, we get updates on brand new houses being sold, new construction, how much those houses are worth, appreciation, and we'll also hear about jobs and how much people are spending. It's like getting the next piece of the puzzle, helping us see the bigger picture. So that's all for today. That's just last week in a nutshell and what we're looking forward to this week. My name is Darin Hunter, trying to make the world of mortgages and real estate a little bit more fun, a little bit more easy to understand. So don't forget to hit the like button. Don't forget to share this video with your friends and subscribe for more amazing updates. I can't wait to see you next week. And if you have any questions, don't hesitate to reach out. And again, if you want to be part of this newsletter, which provides a little more detailed information, please leave me a comment, contact me directly. Have a fantastic week.